right, traders. So is that Fed pivot, that Fed pause trade over? If you've been following my work here, we've been talking about the price action we saw in the bond charts, actually, the bond yield, as well as the dollar, but mostly the bond yield, where we saw this sort of mispricing where a few months ago, Powell and the Fed kept talking about interest rates are going to be higher and are going to stay high for a long time. And the markets were not really believing that because we were seeing bond yields not follow along. And then finally, or in January, well, in February, we got the January 2023 CPI inflation data, which showed an uptick, beat expectations. And basically, we've seen this repricing, right? The bond market finally started to shoot higher. We got that little gap up and that pop, this breakout of this trend line. As you guys know, we've been saying if yields here continue to move higher, there will be some problems with the equity market. So, breakout in the 2-year. We also have a breakout here in the 10-year, although now you can see as I'm recording, we're just testing basically the breakout zone one more time. But the big story, of course, this week is Powell's testimony to the Senate committee, where he did say that interest rates are likely to be higher than previously anticipated. And of course, more it's due to the CPI inflation data that showed an uptick. Essentially, the key takeaways, and you can see Powell's quote here as well about the stronger than expected data, but the key takeaways from this meeting or the Senate committee testimony is that the terminal rate that the Fed will basically, stop or pause, I guess, interest rates is going to be higher than previously expected or thought. It was at 5.25%. And we may still technically get large rate hikes, not these small 25 basis point hikes, but these 50 basis point hikes could still be on the table. We've been saying this, in no time in economic history has inflation over 5% been tamed with interest rates below the rate inflation, which basically points to central banks having some more work to do. And currently, I showed this chart actually many times, but this is the inflation from 1970 to 1980. But, currently we've been hearing Powell mention disinflation, right? Where, you're seeing inflation drop in a period of inflation. We had the same sort of setup in the 70s when we saw a year of disinflation, but this is what happened was the Fed actually began cutting interest rates early rather than holding interest rates, high for a long period of time. And then, of course, you saw inflation rise back up to double digits, which saw Paul Volcker having to raise interest rates to 20% and higher. And of course, the Fed wants to avoid that mistake, which is why they've been adamant in saying that interest rates will remain higher for a long time. Currently now that the market is pricing interest rate range of between 5.5% to 5.75%. And this is according to the CME Group data. And if you're not familiar with that data, CME Group, they have this Fed Watch tool, which I think it's very invaluable. And it shows the 30-day Fed funds futures pricing data. And basically, you can click on the contracts here. You have your May 2023. So this is, of course, for the Fed meetings, your June meeting data. And it goes up here. You can see till the end of the year. And you can sort of see what the market is pricing in. And a lot of it is in that 5.50 to 5.75% target rate in basis points. So that's where we get that data from. And again, that can increase depending on how this inflation data comes out. So the market, is in a bit of flux, right? So inflation and interest rates are still sort of like the driving factors. We've seen big sort of, stores like Home Depot have lower earnings. However, retail spending is still pretty high, and the employment data is still coming out pretty strong, right? So a lot of this mixed data, I think a lot of people are confused because now you have to put into question the Fed's soft landing, which is, they'll be able to raise interest rates to a certain point, a Goldilocks zone, let's call it. where they'll be able to tame inflation without causing a recession, right? But maybe that's going to come into question a bit later. If we take a look at the markets, of course, a lot of the markets felt the pressure post Powell. But as I've said, we are still above major sort of support and breakout zones. So there is still hope of a rally, right? On the S&P 500, we talked about this major trend line, which I've drawn out connecting the all-time highs back in 2022 of January to present day. And we had a bit of a bounce on March 2nd from here. It looks like it's turning out to be a dead cat bounce, but we shall see if we'll be able to find some support here to take out the highs. And if you read my market moment articles, I've talked about these highs which need to be taken out, which is sort of the more prudent way to play these trades. The NASDAQ as well had a very, very nice bounce at that support level. But as you can see, no momentum as of now. Two charts I'm watching really closely in the markets are the Dow Jones and the Russell 2000. So let's start with the Dow Jones. And clearly you can see a bit of a dead cat bounce here. And it does look like we are going to break below this major support, which we've been holding since December of 2022. And then the Russell, oh dear, look what we have here. And it does look like the Russell 2000 is actually breaking below this support. And it's very, very weak. And the reason why I pay attention to the Russell 2000, which is the small cap index in the United States, is because this market, believe it or not, tends to lead the other three markets. When you see a big, big red day in the Russell 2000 like this, it does more often than not point to more weakness coming for the S&P 500, the NASDAQ, and the Dow Jones. So pay attention to this, a very, very strong close on the Russell 2000. And you can see here on our VIX chart, VIX could be, the volatility index could be seeing a bit of a pop here at these levels. And there you go, up sort of almost a 6% move as I am recording this. And another chart that, we've been watching is that US dollar chart, as it has confirmed a breakout. We did see a breakout here above 103. Another breakout has been confirmed this week with a major, major day. And of course, that was due to the Powell move, right, with interest rates looking to go higher. The dollar is going to benefit from that. So keep an eye out on this chart as well, right? Keep an eye out on the yield chart and also on the US dollar chart. But as of now, as I said, some confusion, a lot of volatility. I'm getting a lot of people call me about what to do here. What's the Fed going to do? And I've sort of been adamant in saying, that inflation is probably not done, right? Because the big problem is a lot of that CPI is coming from shelter and from food, which of course, supply chain issues is one thing for food. But even if a recession occurs, those two things are really what people still will spend money on, even in a recessionary environment. So, some tough decisions for the Fed ahead. And interest rates are likely to, go higher and remain higher for a long time. But the data for February of 2023, the CPI inflation data, which will be released this month for the month of February 2023, is going to be highly anticipated because if we see that inflation is beginning to peak up again, you've had 2 months of, inflation beating expectations. There'll be more people realizing that the Fed will continue to be hawkish in order to catch this, what would be runaway inflation. So that's it for me, folks. Once again, the Russell and the Dow Jones, very, very important support levels are being tested. And these breakdowns here could point to more weakness in the larger equity markets. Watch that dollar. And as always, keep an eye out on the 2-year and that 10-year. But let me know in the comments below, folks, where you guys think the markets are going. Do you see this as a buy the dip opportunity, or do you think we are going to take out the previous lows? Give this video a thumbs up. Be sure to follow, and I'll see you guys in the next chart attack.